Time for the ups and downs. Zac Ashmore here with a market report. Zac?
Thanks, Mike. We're seeing a slight bounce back from last week, but overall commodities are on the downward trend. Let's take a look. Last week's biggest loss, soybeans down 60 cents. Quite a drop. We'll get into why in a bit. Last week's biggest gain, lumber, $63 back up, but keep in mind the previous week it dropped $280. Corn also seeing a rise, back up about 16 cents after its fall of 88.5. Corn, the biggest talk of the markets. Prices dropped massively 2 weeks ago and only a fraction of return. So what's causing it? Well, it's an all too familiar story: Chinese buying. Last week, the USDA confirmed sales of about 53 million bushels of new crop corn. According to Brian Splitt of agmarket.net, China needs the grain for two reasons. One, Brazil's crop is running out, and two, China's hog herd is growing. Analyst Naomi Blohm takes a closer look into the numbers and gives us some context of what may be coming.
On the corn rally that we've had since August, there have been 4 major rallies along the way. Each rally had a 50 to 61% Fibonacci retracement correction. That's exactly what this market has done right now, to a T. So going into this next week, if we can find some additional fresh news, market's going to start to find some bottoming chart action, and that'll be good going forward as we start the month of June and have new fund activity come into the marketplace. So again, with the wheat, with the corn, with soybeans, everything is at a really kind of a hinge point right now. So we need some fresh news soon. That would help to resume that uptrend, that's for sure. Going back to this technical chart action, give the market a little bit of a week or so to see if we can find some strength and footing here to take another leg higher. But if you are thinking that you want to protect some value, make the cash sale, look at reownership, going out into getting through 2 USDA reports in June, and then of course pollination in July. And one other thing to emphasize with the corn market is that there had been rumblings of high planted acres for the June 30th report. So I guess really curious, I look back at history, and to have such a big jump to go from 91 million acres up to 96 or 97 would be unprecedented. If you look back at the last 17 years, 12 out of 17 years, the USDA does do an increase in acres from the March report to the June report. But the average increase is only 1.1 million acres, not any big, gigantic jumps. So if it is a smaller number, like 1 or 2 million acre increase, we have zero ability to have any weather issues at all this summer, because it would just make that new crop carryout that much tighter and give market prices that much support going forward, which I think could be something that China is watching. I think they're very well aware of that whole scenario.
So why did beans fall as much as they did? Well, I've been looking into it, and the situation is both simple and complex. Much of it has to do with acres and availability, the old supply and demand. Analysts predicting higher bean acres this year, meaning more supply come harvest time. With more supply means demand's met. That tells us demand not increasing enough to warrant higher prices. As I said, both simple and complex. This month's cattle on feed report dropped last week, giving us a better idea of our current livestock situation. Considering the slight rise in cattle prices, up about 2 cents to be exact, I'd say the report had an effect on the market. Shayle Shagam, USDA livestock analyst, gives us some key numbers from that report.
The number of cattle on feed on May 1st was about 11.7 million head, which was 5% above a year ago, and the second highest May 1st inventory since the series began in 1996. During April, feedlots placed about 1.8 million head, which was 27% above 2020. And during April, feedlots marketed just over 1.9 million head, which was 33% above year earlier levels.
According to Josh Maples, MSU livestock economist, drought conditions in the Midwest are affecting things, as they are cattle country out there, on top of higher feed prices. We'll continue to watch as the weather situation unfolds. Following along with beef cattle, dairy herds also rising. According to the USDA, U.S. milk production up 33% compared to last year. Milk per cow and herd size also up from last year as well. Naomi Blohm once again gives us the market side.
Right now, actually, what we've seen is lower prices because we just had a milk production report come out this week. And we were thinking that because the grain prices were higher and because we were getting lower on hay supplies and things like that, that we would maybe see production work a little bit lower. And the opposite happened. We had milk production up 3.3%, which is huge, and so that's going to weigh on prices. So going forward for the rest of summer, now we're all still waiting to see, are we going to see milk production at all taper down a little bit just because of these higher values of feed? So that's something the market's watching. But in terms of have we seen any herd reduction? Actually, no. On this report this week, we found out that there are 13,000 more head of cattle than the month prior. So we haven't really seen too much of a reduction just in the short term. You know, from COVID a year ago, things are different and we're, you know, kind of back into the full swing of things. Milk prices maybe going to be a little bit softer here just because of this big milk production number that came out. But ultimately, things still in a long-term uptrend, just like the rest of the commodities are.
And that's it for a deeper look into the markets. A lot going on, spring coming to an end. We've still got growing season ahead of us. Looks like 2021 may well be a return to normal. Well, as normal as markets can be. Have a happy Memorial Day weekend.